Jeff, we follow Italian politics very closely, and actually the step between, what happened over the weekend with a possible constitutional crisis from Italy exiting is quite a far way off. So it seems that the markets largely ignored the Italian risk, and then suddenly something sparked it. At what point do they kind of regain a little bit of calm? Is there something that the ECB needs to do? Is it something that Italian authorities need to do, or is it just, a mood in the markets?
Well, I don't think it's the mood in the market. I think it's the realization to the new change in the facts of you now have potentially here a referendum, and you're setting up this election as a referendum that raises the stakes on the potential downside scenarios. So the market is pricing a set of distributions, a distribution of a set of outcomes. One of those outcomes had been very, very small, the outcome of a renegotiation. Let's not say the exit, because there's a lot of interim steps that one could take that fall short of a full-on exit. I don't know if we come up with the fancy quip yet, a tal exit. I'm not sure where we'll go with that. But that probability was very small, and now that probability, because of the political changes, can't be viewed as such an unlikely outcome. And as you raise it, then you think about what the implications might mean for the valuation of debt, and that could mean a very significant reduction in the value of the debt. And so you start pricing in those probabilities. So that's not something that's going to go away, because the uncertainty of the elections is not going away anytime soon. None of this has a quick, let's just unscramble the egg and go back to where we were 2 or 3 months ago. No, we have to move forward, and as we move forward, we're going to move forward through a couple of different scenarios, as your earlier guests were laying out, between this easing some of the political uncertainty and coming back to the center, and kind of the arguments that say, no, when faced with the risk of a more disruptive choice of exiting, the population will pull back and they'll vote more for central parties. Or the alternative, Francine, as you were suggesting, that blocking the populace here sort of riles up the populace, gives them more support, but from a market's point of view may raise the odds of them using that support to put about a more aggressive solution that for the valuation of debt may have greater downsides, and therefore you maintain some of that uncertainty.